Bringing Bill Baruch joining us from Blue Line Futures, the president at the firm. Bill, great to have you here to close out a pretty exciting week. Maybe not for those pure longs out there, but I know you're not one of those people. You're a trader who looks at charts, tries to figure out where the momentum is. Do you see any momentum right now that is easily capitalized on?
Well, the nice thing you mentioned, we haven't made new lows yet. See how this day finishes out. I mean, there's a lot of support that we highlighted in our morning note to clients between the 42.85 down to 41.50 or so. So yeah, I mean I think it's just sort of how we close today. I think there's definitely a Goldilocks scenario to take from the jobs report today, and I think that was not going to be seen in the market today due to the headlines, but we could see it coming out of the week. Your previous guest talked about Marvell, and I actually was buying Marvell. It's some name that I really like, and I have it in portfolio.
Hey, were you the one buying those calls?
I was buying for my personal account some call spreads this throughout the day, looking out to May 75, 85 call spreads around $2 or less, and I started maybe a little bit early on them, but I like them a lot, and it's a name that we've owned going back to the second half of 2020 when this thing was in the 30s. We trimmed it pretty significantly into December and early part of January, and we're really in portfolios put that back on today after this earnings. Want to get through that earnings report. But with that said, I mean, we're looking at I'm allocating a little bit more into tech, Google or Alphabet's name that I added to today. So I'm still, my point is I'm still confident in this market, and I'm looking at that buy the invasion narrative. It's just we have headlines driving things. And last night, the market finished on soft footing. It sucked in all the buyers early on, and then it left a lot of supply overhead that sort of drained out into the close. And then you had the headline news with the nuclear event. So, listen, one thing I'll be watching too coming in next week, if commodity prices could come in a little bit, looking at wheat or crude oil, copper, I think that actually will be a catalyst for higher stock prices with tech leading the way.
Bill, the companies Alphabet, Marvell that you're buying, those are the ones, the chip makers, and then basically Alphabet and Apple are the ones that I would argue looks like they still have potential to be in long-term uptrends. They haven't exhibited the same downward momentum that some of the high growth themes or even our reopened trades now have too. Are you going into any of those areas that are very deeply far off the highs or making lows? Do you think there's going to be a trade in trying to catch falling knives in this market?
Yeah, I mean, overall our portfolios are very diversified, and we have what's called an opportunistic equity bucket that we actually pick stocks in. And our top two names in that is Apple and Alphabet, and we added to those even previous today when on February was the 24th. That move lower early last week was Apple hit the 200 moving average to a T, and Google or Alphabet hit the trend line from March 2020 perfectly. And I love being long Alphabet as long as it holds out above 2,500. Great level there. But, there's, I mean, like you said, some of the reopening names. I like Expedia. I love Expedia. It's a top 10 holding of ours. It's been a great name. It broke out before getting sort of this undertow of fear of traveling, and all those reopening names took a bloodbath here this week. I still love it. Micron's one that is down pretty big today. I think there's good opportunity there as long as it can hold out above its 200 moving average. I think the DRAM business is something that's going to continue to build up through this year, and so it's a little way to kind of diversify out of the NVIDIA, AMD, and Marvell chip makers. Yeah, I mean, there's just a lot of opportunity out there, and the energy space, we're still really overweight energy, but I'm starting to trim some things within that space. Shifting back to the commodities specifically, crude oil, big move. It's come, up to 116. We've been very bullish in oil. Watching this consolidation area, today in the last hour, we've actually moved out above some near-term resistance at 114.5. As no one wants to be short ahead of the weekend. So I think there's a lot of these ahead of the weekend narratives, and I'm very, very curious to see Monday and Monday's price action.
The things that are in trend are extending that trend into the weekend, to your point. Nobody wants to try and fight that trend, whether it's higher in crude or lower in the stuff that's trending lower. Again, I think it's a good point to bring up Apple, Alphabet, Marvell, arguably too, within chip makers as the companies that haven't exhibited those downtrends yet. Bill, what about the potential for this market to snap back if there's some good Ukraine news over the weekend or whenever it arrives? How sustainable will that rally be if, on the other side of it, we're looking at a hawkish Fed right where we left them and inflation probably higher than where we left it before the Ukraine situation. How far can that bull bounce get?
I wouldn't be surprised if we see the inflation narrative come in a little bit. I mean, obviously, what we've seen here the last week with commodity prices higher, so it would take a little bit of work. But if we see the inflation narrative come in, remember, last year, June through August, CPI was averaged at about 4.3%. So higher base numbers as we move into June through August gives us a nice little bit amount of time for some of this near-term inflation to come in, too. And I think I would not be surprised to see the equity market out above the S&P, out above 4,600, moving into July and August, if that happens.
Okay. Hey, Bill, what about this move in gold? Are you a bug yet? Bitcoin near the lows, gold on the highs. Is the case closed here?
I've been a bug in gold. I always come on. I'm an eternal gold bull. I am.
It's looking good.
I'm not chasing it here to add more. We have it in our portfolios.
Okay.
And we have a lot of mining exposure and gold, silver exposure. So I like it here. But again, it's one of those things that once we see the news flow subside a bit, gold could come in quickly. I wouldn't mind seeing a nice little move to 1860, 1880 to squeeze longs and give us a great buying opportunity.
All right. Like that nice little setup there for us to think about. Appreciate it, Bill. Have a great weekend.
Thank you.